Hey folks, Cesar Perez here. Today I'm going to talk about 5 tips you can use to lower your health insurance expenses. The first one, which is one of the most important ones, is number 1, buy a high deductible health plan or health insurance, or you can also buy what we call healthcare sharing. You can go under healthcare sharing. It's not insurance, but you can use it to your advantage because unlike regular health insurance, healthcare sharing, which is sharing of people of the same faith, usually will get together and they pay a monthly contribution. Those contributions go into an escrow account, very much like insurance, and from there claims get paid. But one of the advantages of going through healthcare sharing is that your prices typically are going to be 30%, around 20 to 40% less. Most of the time it's about 30% less than your regular health insurance. But if you do get a health insurance plan, get a high deductible health plan, because that's going to be the lowest cost of them all, especially if you are very healthy. If you don't have any conditions, you're younger, you're healthier, you may want to consider getting yourself a higher deductible health plan. That's going to save you quite some money. Once you have a high deductible health plan or a healthcare sharing plan, then you can combine it with a few different things to make sure you keep those healthcare expenses low. Number 1, if your high deductible health plan or your healthcare sharing plan doesn't offer doctor visits, if in your area, look for, it's called direct primary care, DPC. Under the direct primary care model, a doctor will usually you will pay the doctor directly. Usually it's a monthly amount for you and your family, and you get a certain amount of visits every month for everybody in the family, and usually those doctors will be able to perform different procedures at the office. It's not just a consultation and that's it. They'll typically perform minor surgeries. Some doctors have EKG machines there, so their scope or their realm is a lot wider than doctors that just take insurance. So when I say direct primary care, that just means that you're paying the doctor directly. So I'm going to post a link in the bottom so to help you where in your area there might be a direct primary care doctor. There's not many around, but if you're lucky, if you're one of the lucky few that lives in a certain area, you may find a doctor that is a direct primary care doctor. If you don't have that in your area, then you definitely want to have at least a couple of visits with your high deductible health plan. Typically, they will give you 3 visits a year. Even if they don't, if you have a doctor that you know you can go and pay cash, and if you're saving $300-400 a month, then that's going to translate into $3,000-4,000 per year. And so, you know, if you're just going to pay $100-150 per visit, that's definitely going to be worth it. The third thing is you want to absolutely use, we're in the 21st century, and a lot of people do not take advantage of this. It's called telemedicine. So with telemedicine, you're able to talk to a doctor through online, and so there's going to be certain things that they can resolve, and you don't have to go into an office. Like, for example, if you have pink eye, or if you have a rash, or if you have strep throat, they're able to treat you. They're able to talk to you and send a prescription over to your local pharmacy. Many of the plans, like the high deductible plans and the healthcare sharing plans, many of those plans include telemedicine. Some of them don't. If they don't, then you can go ahead and purchase this directly. I'm going to post a link below where if you want to access telemedicine, you can go ahead and click that link. It'll show you what you can and cannot do with telemedicine. But for the most part, it's very helpful. You can go ahead and directly message a doctor. You can Skype with a doctor or FaceTime, whatever you call it, and the doctor's able to talk to you. If you have a rash, you show it to him, and it might just be something that he can take care of without you having to go to an urgent care or to your doctor's office. The other thing is that with telemedicine, typically there is no cost to your consult, which is amazing. So like you don't have to pay a co-payment when you talk to the doctor. So that's pretty cool. Number 4 is, I've talked about this before, you need to download the GoodRx app. The GoodRx app is going to help you cut your medication costs by 20 to 80%. So it just depends on what you're trying to get. You download that app to your phone. You get it at the Play Store or the iStore. If you download it, you can type in your zip code and then you type in the name of the medication, and it's going to show you all of the options around you as well as give you a discount. So you want to absolutely take advantage of that, because I have had people use that app to cut their medication costs substantially. So I had a gentleman that he didn't have insurance for whatever reason, and so I couldn't get him anything during that period of time. We had to wait until open enrollment. He was taking a couple of medications and he was paying over $50 every time he had to go refill. Once he got the GoodRx, it went down to $8, from $50 to $8. He was just delighted. So that's what it can do for you if either you're not insured or if you're on one of these high deductible health plans. The last tip number 5 is negotiate. So anytime you get a bill, you're going to get a bill for the full amount. You don't have to pay that full amount, and the reason you don't have to is because if you go to the hospital has they'll have a range of how much they can get from certain procedures, and they're obviously going to bill you the highest amount. So when you negotiate with them, you're gonna use a certain lingo. You're going to try to get them to charge you Medicare rates. Medicare is so when it comes to Medicare, a lot of the doctors, facilities, hospitals, a lot of them use Medicare rates because there's so many Medicare eligible beneficiaries out there that they're used to going through Medicare rates, and there's a standard. So like Medicare has a list of how much a hospital can charge, and it's actually not bad. Well, if you're gonna pay through like a health plan, or maybe you don't have insurance, when you're negotiating, you can use and throw that around like, hey, what if I pay you whatever Medicare rate? Well, they might say, oh, you know what, that's fine. They'll give you the rate, whatever that is. That's how much you would pay. But under a high deductible health plan, you will have a maximum out of pocket, or even under the healthcare sharing plans, they also have a maximum out of pocket that you would pay. So that's negotiating this in case maybe you just can't afford it. You can also make payments. You don't have to pay all the stuff at all the payment at once. You can also tell them, hey, I'll give you payments. The other thing is, if you have a lump sum amount, let's say they're billing you $4,000. Well, you can say, well, you know what? I only have, what if I give you $1,000? And that's all I have. You know, I'm not going to come up with any more money because X, Y, or Z reason. Well, if I send you that, will you go away? You know, more often than not, they will take it, because the alternative, sometimes they know that most of the time they're not going to get paid. So they will end up taking that if you are able to talk and let them know, hey, this is my situation. I don't have money because of this, that, or the other. They might take that, or they might just put you on a payment plan. So those are the 5 tips that I got for you. I will be elaborating on some of these in a future video, so make sure you subscribe so that we're able to keep in touch.